Welcome to the okay, I'll go again. Welcome to the panel discussion on the new IRDAI guidelines for general insurance. Just to begin with, as a keen industry observer, I look at regulation now almost as a very complex, multi-sided polygon. So, in some ways, there are new rules to follow. That's the compliance view of things. There are new rules to follow. Regulator would like you to follow the rules, and it may seem as if that's it, just go ahead and implement it, right? But then there is the dimension of the end user. So if you have a bad experience as an end user, you might choose a different provider. And so it's not as simple as simply dictating certain rules to follow, right? And then there is this mysterious people dimension too. So you find that there's the murky world of sales quotas. There are operational challenges, and then there's people in general. People are mysterious. So the way they react to things inside an organization and outside it to regulations is not a very simple answer. So it's always a lot more complex than it seems, right? So in fact, it's very clear that you can't summarize regulation in just a few sentences of text. There needs to be a debate. There needs to be a discussion of sorts. And to help me make sense of it today, I'm joined by a few experts, or I will be joined by a couple of them very soon, but at least we have some of them here. So I will have with me Prerak, who's on the call here. Prerak is a founder of RIA Insurance, which is an insurtech company. I have with me also Sudeep Mathur is here as well. He's an associate director of product at Policy Bazaar. So he represents, in a way, one of the most influential and disruptive intermediaries in business here. So definitely making waves here for a while now. So he's here as well with us. There are certain representatives from the industry who will be joining us shortly. You will find that Samir Karikate will join us soon. He is in fact the Chief Legal and Compliance Officer at Edelweiss General. He's having some Zoom troubles and he's just trying to install and download and join soon. And hopefully by the time we get going, he's here. So he will probably give us a bit more perspective and on compliance, but let me assure you, Samir is not your regular boring compliance guy. So you can expect a lot of interesting stuff coming from him. And apart from that, we have Bilal Lone. He's in fact VP and head of business operations at Aditya Birla Health Insurance. He's in fact stuck in a very, very senior meeting and he's not able to come out of it, but he should be here in 10 minutes is what he's assured me. So we'll find him by the time his questions come up. So he represents a very sort of pragmatic and practical understanding of operations. And he's from Aditya Birla Health Insurance. So he kind of represents the health insurance industry also. So this is the eminent panel that will eventually gather in the next 5 or 10 minutes, right? But to tee us off, there is somebody here, my colleague Abhijit. I thought it would make sense to actually go through the letter of the law before we get into the spirit of the law. And for that, I invite Abhijit, who actually heads our product strategy, to take us through maybe a slide or two about it and walk us through some of the legal aspects here, which we will use to interpret during the discussion today. Go for it, Abhijit.
Thanks, Riju. Hey guys, good evening. Great to meet with you all. Abhijit here. I lead product strategy for IRDAI. So let me just pull up the screen. Just give me a second, please. So while Riju very accurately mentioned that the regulations cannot be summarized in a few lines, let me go ahead and try to do exactly that, right? And let us try to see what the letter of the new regulations actually talk about. And then as the discussion goes about, let's see what are the interpretations and what are the implications for the entire industry, right? So I'll pick it, very quick and very brief, and I'll just divide it into two parts. One is the part around KYC, and the other is the part around AML and TP. So when I talk about general insurance, typically the earlier rule which was applicable from IRDAI was the 2013 guidelines. Of course, there have been certain updates over the time, but the 2013 guidelines used to be the most important guidelines to date. Of course, all that changed with the 1st August 2022 master circular, with IRDI essentially bringing general insurance companies to the same KYC, to the same level of KYC due diligence as a life insurance company as well. And the general direction that we see IRDI going towards is also towards meeting the standards with say RBI, SEBI, and so on, right? So if I were to just talk about the first bit with respect to the KYC part of it, earlier the guidelines used to say that the KYC checks are needed only at the claim payout stage or in case there is any refund. Now, of course, the biggest change that has now come about is that KYC is now needed at the point of onboarding itself and not necessarily at the time of claim payout. Right. Of course, that means that for every new customer that we onboard, we need to perform those set of KYC checks. And when I say KYC, of course, I mean the POI, the POA, all the various things that IRDAI has actually detailed quite a bit. The second thing is the earlier KYC checks were needed only if the claim payout was above a certain threshold or about a certain premium level, etc. All that distinction has gone away. While of course there are certain nuances around premium levels and so on. Broadly, it looks like the KYC guidelines will now be applicable for all kinds of policies being issued, irrespective of the premium size, policy size, and so on. PAN details, of course, were not mandatory earlier. They used to be mandatory only for any policy with the premium greater than 50K. That has now been changed. Now, PAN details are now mandatory for all policies which need to be onboarded. General insurance, because the guidelines were slightly dated with respect to 2013, a host of digital ways of performing KYC, which then has been picked up by say RBI or SEBI, had not been explicitly called out by IRDAI so far for the general insurance space really. But if you look at the new regulations, again, because it brings it on par with life insurance, all the new digital ways of performing KYC, all the new instant ways of performing KYC, that is the CKYC, DigiLocker, video-based KYC, and so on. All these have now been explicitly called out or explicitly encouraged by the regulator, if you ask me, as valid mechanisms of actually performing the KYC process in the first place. So that is with respect to the KYC in itself. Then, of course, there is the part of anti-money laundering, PEPs, which to a very limited extent used to apply earlier to general insurance, like a couple of lists used to apply for the anti-money laundering list. And it was not very clear with respect at what point of time do those checks need to be carried out in the first place. But the new regulations are pretty clear on it that there are a set of 4 or 5 lists. These need to be carried out well before the policy is issued or you enter into a contract with the end customer, right? And of course, further PEP screening was not mandated. Now it is required, not in terms of a go, no go decisioning, but rather in terms of the risk classification of the customer, where you would classify them as a medium risk, high risk, or a low risk, depending upon their PEP status, and then take accurate calls based on the company's KYC guidelines, so to speak. So, of course, there are multiple other nuances with respect to how KYC needs to be performed, what stage, what needs to be verified, pictures should be taken or not, etc. But these are the broad changes which we have thought as relevant, especially after discussion with multiple industry members. So I will set this at the context and probably hand this back to Region now to take the discussion ahead.
Thanks, Abhijit. So I think, as you can see, there's a change here of sorts. And I'm going to begin here. I would have liked to start with Samir and his perspective on the law and that you've stated here. But we'll wait for him to join with, I think he's having some Zoom difficulties. So maybe to begin with, we'll start with you, Sudeep. So it's one thing to know what to change, and at least in terms of the rules. But there are always these nuances, right, which are almost about adoption. And so it could be that it's very high volume, so drop-offs might increase because of that. It could be that there are digital channels and they behave differently. There are offline channels that they behave differently, and obviously there are different insurance types, right? And you can't have one way to do it, one single way to do it. So from your perspective, do you feel that you're prepared for this? Do you feel prepared for this challenge? What are some of the difficulties you see?
Thanks, Riju, for asking this question. And as Abhijit pointed out during his brief introduction on what is going on, these guidelines have been in place for life insurance for some time now. And we have been doing this on our platform for all the life insurance customers that come through our platform. So if we see from a preparedness perspective, we can't just look at one individual entity, whether they can do it or not. We will have to see it from the perspective of the whole ecosystem and the industry. So since it has been there in the life insurance space for some time, the whole ecosystem has geared up and has built the infrastructure for doing the KYC as per the letter and the spirit. So if we look at the preparedness from life perspective, we are doing it, and couple of things which were there mentioned on the slide. So whether it is CKYC or whether it is through DigiLocker or whether it is video verification or PAN verifications, most of these things are there in the life space for some time now. And the ecosystem works well because it's in use where we do it for the customers who come to policybazaar.com. At the front end, there are underlying infrastructure rails where APIs are available from various providers. There are API integrations with the insurance companies where we pass on that data to the insurance company. The ground rules are set on what type of case, what would be the output, and what is acceptable, what is not acceptable. So it works well in the life insurance space. The customer in the life insurance space and also the ticket size in the life insurance space is very different. So the maturity of the customer, the engagement cycle which is there. So typically a life insurance policy would go through a very detailed underwriting and analysis. So there would be a physical medical test which would be conducted. There would be an income check which will be done there. So typically it takes some time, and the customer is aware of that, and as a part of the process is, to some extent, I would say, prepared for doing all of this. However, now when we look at it from general insurance perspective, what I see and what we have observed so far is that I think the ecosystem would take some time to build up, because all the things that I was mentioning, which works well in the LI space, whether it is about the API infrastructure, whether it's the integrations, whether it is about the acceptability or the ground rules on what works, what does not work, those kind of things would take some time to be built, and then second, stabilized for general insurance. Second thing is that even the customer expectation, the type of customer, the duration, the time it takes for the policy issuance and all. So one of the things, say for example, that a lot of GI products are low ticket size products. So typically the premium amount is very small, the margins are very small there for all the participants who are working in the ecosystem. So wherever we can have the whole process work in an automated way over the APIs with the system, it would work well. However, so even in life insurance space, it does not work that way for all the customers. And as a fail-safe, we have the manual backups available. So if the customer is not able to do KYC through CKYC by providing a PAN number, or is not able to authenticate through DigiLocker, does not have an account, or the mobile number is not linked, or does not have a PAN card and the Form 16 is acceptable. So in all of these cases, there are manual backups built in, and there are people who are trained to handle it. However, when we look at it in GI space, I am not sure whether, considering the ticket size constraint, whether the industry would be able to put that level of manual backup to support the whole process. So now, to answer to your question in a single sentence, I think there can't be one single thing. So it will have to be taken in context of the product and in context of the type of insurance that we are talking about. One of the example that I have, and which is a question that I'm not sure how it would be addressed. So I was booking a ticket this weekend through IRCTC. And immediately after booking the ticket, I got an email for the insurance, which I had opted as a single ticket opt-in. The first question that came to my mind, because we have this webinar today. So my question was that how would it work in this kind of a scenario now? Because it's an embedded insurance. And as our chairman has said, that embedded is the way to go forward. And the whole industry is working toward increasing the penetration. So there are various scenarios where I think all of these things will have to be looked into. So it would be very much dependent on the product and the context in which we are looking at it.
At the risk of sounding slightly pedantic here, I've seen this happen on the lending side with the BNPL use cases, where you buy a ticket and then you go for a BNPL loan, and then the installment finance happens. So, I think there are ways that we could probably look at it from the insurance perspective. At least there's a hope. There it is. At least the buyer on the e-com side or IRCTC may have a window into doing it better because of the, he's used to some of the lending behaviors previously. So hopefully, things will pan out better. But you're right. I mean, we can't paint it with one single brush stroke. We should There has to be a nuanced perspective. Let me move to you next, Prerak. You're almost the voice of the startups here, so no pressure. So let me ask you to begin with, from the perspective of master guidelines, how does it impact insurtechs?
Yeah, it's it's interesting, Riju, because I think Sudeep's brought up a lot of the very relevant points already. But when we think about Policy Bazaar, it's kind of the big daddy in the room, right? They figured out all these different aspects of technology integration in compliance using automation, manual processes. But Sudeep himself pointed out that one, general insurance has a lot of different ticket sizes, a lot of different types of products as against say life insurance, right? And the nature of the products differ, the purchase process differs, and the kind of information that the customer has to share today to be able to actually get a policy also differs drastically between general insurance and the various subcategories and life insurance. So when we look at these guidelines, they're going to make a definite impact on the sales of insurtechs in India, which are currently in distribution. So when we look at digital brokers, and not again just say the large brokers like Policy Bazaar, but this long kind of wave of digital brokers that are coming up in India, employee benefit players such as a Plum, Pascare, Nova that are coming up on the employee benefits of the corporate side, or again as Siddhi mentioned, embedded players, right? Zopper, Discovery. We will see that all of them will have to refurbish and readapt to these new changes. First, if we think about the short-term impact, right? For these digital intermediaries, the additional KYC for general insurance products at the point of sourcing will definitely result in a lot of additional friction in the sales process, which will lead to smaller, or lower sales conversion in the very short run. Second, again, as Sudeep pointed out, right? Customers, the IRCTC example, customers want that policy document immediately. Now, whether it's a digital intermediary or a physical intermediary, customers are not used to waiting for the policy documents anymore. They're demanding it instantly. Now, if we end up adding this one additional step, we've got to make sure that this KYC process is integrated very seamlessly into the current purchase journey, right? Irrespective of the kind of general insurance product that we have. And finally, under the current guidelines, the onus of completing this KYC is really with the insurer. Intermediaries can help enable this KYC, but eventual accountability, if you look at it, is with the insurer, right? So what's going to happen is, I think we'll find that a lot of different general insurance companies, standalone health insurance companies, they will run helter-skelter over the next few months. They'll come up with their own KYC policies, their own KYC process, their own KYC technology stack, which may result in a bit of confusion in the very short run for insurtechs, as well as say customers in the very early days. But we won't stop there, right? We have to move forward as an industry, and the way to move forward is for insurtechs and insurers to work together towards introducing robust KYC technology platforms that can automate this KYC process in a distance mode, in a real-time basis. Now, we've got a few points that we should consider collectively, right? Number one, ideally, as an ecosystem, we should promote KYC through digital modes from the get-go. Video KYC, CKYC, Aadhaar authentication, any of the modes, digital is the only way forward. Number two, we've also got to make sure, by the way, that insurtech specifically now need to integrate in multiple KYC channels, right, onto the platforms, because different insurers will have their own requirements for different products. And they also need to push these forward into the journeys of the agents and the POSPs, right, and educate them too. Third is, we've got to be customer-centric. We've got to make sure that we give our customers enough choices on the mode of KYC that they would prefer to use. So we can't push a particular KYC channel and say, this is it. There's no other mode for you to do it. The fourth is, I think insurtechs, intermediaries have a very important role in educating the customers and their own agents and employees on the power of, for example, CKYC, the reusability. And that's how we'll get the customers to get into the habit of providing this KYC on an ongoing basis. Because a customer buys, they might get a couple of loans right in a year, but they will end up buying hopefully a number of different insurance products on the general insurance side. So we've got to bring in the reusability. And then ideally, the regulation would permit these insurtechs should also be able to track that customer's KYC identifier from CKYC, post-customer consent, kind of keep it on their side also, right, if this is allowed, really. So that when the customer comes back to Policy Bazaar for the next policy purchase, they're actually able to, educate the customer and insert that CKYC on their behalf, right? And then finally, what I would strongly also say from my side, if regulations would permit in the future, it would be really good if regulated insurance intermediaries are allowed to carry out this KYC process, right? And not only insurance companies. So that I think will be both in the favor of the customer too. And insurers also, as long as IRDAI permits it, will have a couple of different ways in which this KYC will get done. Yeah.
Thank you, Rira. So I think I wanted to get a one-line answer from you also for clarification. Are you pro the KYC AML thing or against it?
See, we live in India, so KYC has to happen, AML has to happen. There's
Right.
no pro or against. There are a number of other factors that are unrelated to the insurance industry,
All right.
unrelated to you and me and our companies, right? Because of which we've got all these regulations.
Yeah.
So I'm not against the regulation in every way or form. They're needed for a different reason. What we've got to do from our side, right? Obviously, as an industry, is it's a change. There will be a short time of friction, and then it'll become a daily, life for all of us, right? So it's through this era of friction that we've got to, work together collectively to make sure that we, get it up and running. That's about it.
Sounds good. Thanks, Rira. Samir, thanks for joining us. I know you had some.
Yeah, I'm so sorry. I had some difficulty in Zoom. I'm not used to it, so I'm just learning the loop.
Problem. But you're right on time. So I've already introduced you, so people know that you're coming in wearing the compliance hat and the legal hat. I've also explained that you're not you're very sort of you have a perspective which is a lot more rounded than just the compliance perspective. And so I wanted to ask you the philosophical question, really, which is, why do we need KYC ML?
It is historically, if you have to look at it, I think the need for it, it is ordained by United Nations. They passed a resolution way back in 1998. Okay, and outcome of that political resolution was that in the UNGA was that we had to adopt all the countries who were signatories or who were part of UNGA had to adopt this particular anti-money laundering provision or prevention of money laundering act, which came about actually passed was proposed in 2002, but actually when it came notified in January of 2003.
Yeah.
And thus began the story of so-called, the KYC of the world, which actually was made applicable. I remember way back in 2005, when the first time it was kind of pushed on general insurance. I was then in a different company, not this one. And we had jointly with all this, we had done a pushback 2005-6.
Mm-hmm.
And until 2013 guideline, general insurance were kept out of the requirement of either KYC or anything to do with PMLA. But however, 2013, they notified that it has to happen at a claim stage.
Right.
Claim stage was accepted by the industry, saying that yes, that's the only place where the money actually goes out.
Mm-hmm.
So two stages were there. One is any claim which is 1 lakh and above,
Mm-hmm.
or any refund which is 1 lakh and above. So that was the only place where we were actually seeking KYC. And actually for AML practices were being done. But however, it was so difficult to really do any kind of suspicious transaction, because only point of, touch was there were too many false positives were coming, because you had only name and address and maybe phone number to go with and as is wont, most of the time the phone numbers were always not available, because 80-90% we never got the right phone numbers, or what phone numbers came were of the intermediaries. So it gave rise to huge amount of false positive in terms of any name. You take any name and you will find so many. We have a very large number, though we are a startup in a way. We are just the fifth financial year in running, but still we have 2 million plus active customers. I'm sure ICICI Lombards of the world would definitely have far more than what we can actually even think of. So the KYC would actually help us with the AML too, because now there will be a lot more surety, because that's something which gives us something which is far more certain. Because if you have your PAN number or Aadhaar number or any other document which is mentioned for KYC, will be very helpful for us to find the suspicious transaction. As far as the cash transactions are concerned, it was anyway over 50,000 and above. And nonetheless, in our scenario, we were not taking 99.9%. We were not dealing in cash at all. As a practice for our company, we don't deal with cash. So all transactions, all payments and everything was actually happening through that was a saving grace, because otherwise it would have been a real mess. But that's where we are in terms of KYC journey. And as Predak was just saying, I wholly concur with him that it is going to be a complete sea change for us in terms of the sales journey. Sales journey, I think they will have to rethink the way we do our sales, and there's going to be huge pressure on all of us.
Yeah, I think that is probably a fair.
And why this, and answering your question further, why it has been brought in now, what my understanding is next year in FATF, they are actually, there is going to be our India's India will also be looked at.
Yeah,
I believe in the last FATF we came pretty close to be also listing as one of those gray list or whatever the list they
greatest
have.
countries. Oh my God.
Yeah. So that's the reason the government of India is pushing this very hard and fast.
See, that
So
makes
if you see most of the developed countries like France and Australia, general insurance is not being part of the PMLA or these kind of requirements. But however, we don't want to. India as such doesn't want to take a risk with that, and they are going full steam on that.
Yeah.
That is what my understanding of these things. And in the discussions with GIC as well as with the regulator, it was a kind of spoken about, but not so openly in that sense. But yes, it was discussed in a very small way. But I assume that this whole push at this point in time is coming from Ministry of Finance, and rightfully so, because I think we are looking at much higher things than. Because we don't want to get into gray list, because our entire economic story will go collapse if that happens.
That is great perspective. Great perspective. Actually, it puts a lot of things, explains a lot of things about the ideology of the government. In a way, we see this trend everywhere. Like it's individuals, merchants, wherever it is. It's almost like account for everybody.
And now, actually, it has become so much easier, Riju, so much easier with the digitization which has reached. I remember way back in 2015 or thereabouts, even prior to that. Because it was so difficult to locate, because if you have to, there was, then I was in life insurance, and if certain amounts or certain amount had to be refunded or something like that, it was nearly impossible to do so. Where we had large number of customers, we didn't have any details about it. We didn't have, these guys didn't have bank account. So in fact, we had to go and open the bank account and then deposit, because we were not allowed to pay in cash. So it had to happen by way of a banking transaction. So that used to be a serious thing. But however, with the push on the opening of accounts and digitization and UPI, I think it's a blessing. Seriously, it's really
it's made it easier to conform to those regulations. So I think Prajakta has asked a question here. You've actually answered a lot of it, but just to summarize for Prajakta's help. So what's happening is that there's a deep link between terrorism and terror financing. And the UN Security Council and the Financial Action Task Force sees this link clearly and decides that, well, in order to stop the flow of funds completely, let's identify everybody and keep track of people who are offenders, which is the list of people that is maintained. And in a way, you might argue certain segments, you need not actually have it in the ambit. But if it is already in the ambit, might as well conform to it. So in a way, the Indian government doesn't want to take a risk and wants to keep in its steady sort of, incremental growth that is happening every year. It doesn't want any sort of, disturbance right now in the macroeconomic sense. So I guess that is where it's coming from, this push to go for KYC ML. Thank you so much for that clarity, Samir. Let me go back to you, Prerak. I would like to just step out of the bounds of KYC ML a little bit and ask you, if you think of Indian insurers, how they can use data in general for more than just KYC in terms of, let's say, underwriting or fraud detection.
Yeah, Riju, it's a great question. First, let me start off. We've got to caveat this, right? It's a conversation regulatory. First and foremost, we should say any insurtech using data should do this post consent and from the user and in compliance with all regulations of the Government of India and IRDAI, right? But having said that, look, it's because of data. I think it's a fantastic time to be in the insurance industry. Insurance, if you really look at it, is the business of understanding and managing risk, which is really your understanding of data. And in 2022, our industry has access to an unprecedented and unparalleled amount of data, right? The kind of sources available, the kind of volume available, the real-time availability of data is really just a game changer. So let's actually pick up data, right? Let's pick up one line of business. Let's pick up health insurance. Historically, if you look at this, insurers have had health data or data available from customers from underwriting, claims, and pre-policy health checkups. But now, today in 2022, customers can share data from tens of different data sources, right? With the insurers and insurtechs and insurance intermediaries. These can be, and I'm for a second going to put regulation aside. This can be health data from your wearables, anything from your Fitbit to your Apple Watch to your mobile phones, your Google Fit, your Apple Health, your apps, your exercise apps, your diet apps, your nutrition apps. Customers also, by the way, can share the health record using the health IRDAI from the Ayushman Bharat Digital Mission. They can share past prescriptions, outpatient visit data from the hospitals. Customers, by the way, can share socioeconomic information such as their credit scores, give access to that. They can share data through the account aggregator framework. They can share the consumption data at this point of time. Additionally, by the way, insurers can use some of this data also, right, to now validate for fraud. That's also been digitized, which wasn't possible earlier. They can actually look at litigation that may happen against an individual, fraud cases against individuals. That's available to insurers now. Based on a customer's zip code, insurers can establish, environmental data, right? We can get access to knowing what kind of water quality, what kind of hygiene index, what kind of air quality, what kind of traffic is an individual living and working between. And then finally, at an aggregate level, we can also get population level data on disease prevalence. We can get data on healthcare costs, healthcare delivery costs. All of this data is now available and can be available to insurance companies and insurtechs right today. This can come together. This data can be structured, semi-structured, unstructured. But what's also important, right? We can now actually start to standardize this, using, say, medical coding standards being prescribed by the Ayushman Bharat Digital Mission. And we can use these to create more granular risk profiles of our customers. And these risk profiles, by the way, are not just important or useful in terms of underwriting or fraud detection, but insurers can use these across the board. They can use to create these. Use these to create insurance products for various micro segments that have previously been uncovered. They can do significantly more granular pricing. They can use it for dynamic pricing for certain insurance products. This data, by the way, can be used in automation journeys for underwriting, automation journeys at the point of claims adjudication. And then not just there, right? Insurers can also, by the way, do well for the customers, keep them healthier, give them access to better healthcare delivery, better healthcare services. And all of this can come together because of what is now available in terms of the kind of data. So fantastic time to be in the industry, fantastic time to be in InsurTech, and a fantastic time to be able to work with insurers to put together products like this.
Yeah, and I'm glad you prefaced it with the consent part at the very beginning, because the way you answered it, probably a lot of users are wondering, oh my God, am I being sort of like, somebody watching me? Yeah, so definitely the personal data protection bill and the consent part of it has a big role to play in it, so that one is able to control, at least as an individual, what one is able to share. Otherwise, it could easily become fairly scary, right?
And Richard, there are a couple of things, right? One, eventually, if you look at this, right, because insurers are in the business of pooling risk. But what ends up happening today, right? If you tell a customer that, look, if you share this data and you'll be able to get cheaper premium. Yeah. We found that customers by consent are willing to share premium, for cheaper premium.
Totally right. Totally
Number
right.
one, they're willing to do that. Number two, I think, by the way, also the role of insurers has to change. So historically, we've been in the business of just being, the kind of the custodians of policyholder money, and we pay claims. But increasingly, our customers are looking towards us and saying that, look, what can you do more? Right? As an insurer, can you help me really manage my risk? Can you help me understand the kind of risk I'm exposed to? Can you help me decrease that risk? Right? Which is also prefaced in the data. So insurers just don't necessarily have to, again, that's why I said, only for underwriting or fraud detection. There's more that we can do, which can be a lot more value added for customers at the end of the day, right? And be very valuable to help them with.
So also anybody who's watched the Jamtara series knows all about the frauds that happen in general payments, or if we talk about, I mean, Sudeep must have so many stories about life insurance fraud, and I'm sure Samir as well. I brag about the fact that I learned about fraud really from the insurance industry, because nobody looks at frauds as in so much detail as the insurance industry in terms of how they handle claims, etc. So data really helps at that perspective. I think I see your point completely here. So let me now move to.
Raju, I'm going to mention that too, right? Fraud is very important. I don't think a lot of Indian customers understand this.
Yeah.
But when there's fraud, and it's really an insurer's responsibility to catch fraud, because what you're doing is you're actually subsidizing a fraudster with a honest policyholders' money.
Correct.
Right. Actually, that's what you're doing, because we are for-profit businesses, right? Insurers are for-profit businesses. So that's actually what you're doing. So the insurance industry really has to push the boundary on fraud detection, right, from our side. Because, we are otherwise taking out money from an honest policyholder and giving it to somebody who does not deserve it. So we've got that responsibility also, really, actually. So
Completely fact. So I think this availability of databases and clean data, etc. I think it is also almost like the other side of the coin. Imagine that you're insisting on KYC AML becoming available or being done on everybody. At the same side, this data becoming available through various sources in a centralized manner with various databases, hopefully for fraud, etc., effectively becomes available again back to the industry to kind of purify the system in a way. So that I see as almost like light at the end of the tunnel in a way. So coming to you, Sudeep, though, to bring up another aspect of it, because what happens often is we think of India as India, but actually there's a Bharat as well, right? So technically there are so many nuances to India, which are cultural, regional, and age related, affluence related, access to technology or not. Sometimes there are journeys with business correspondents. Obviously, intermediaries such as yourself understand it very well, right? So from your perspective, if you could throw a little bit of light on these aspects of how to target the various segments and how you look at it as Policy Bazaar.
Sure, Riju. Actually, it's a very, very valid question. And in our experience in last couple of years that we have been doing it on the live side, we have seen different kind of customers who lie on the complete range of spectrum that exists there. So we have seen customers who have everything digitally available, who are actually ready to share their income proofs through the account aggregator framework, and even in the life insurance space, because the complete data is available, they then end up getting the benefit of getting the policy faster. And as Prerak was mentioning earlier, if you tell the customer that this is the purpose for which we are taking this information, they would be willing to share that. And we have seen that kind of a customer coming to our platform. But at the same time, we have seen customers who are at the other end of the spectrum as well. And it would depend on the type of insurance that you are looking at. So in life itself, there is investment, there are ULIP, there are endowment, there are retirement plans. But then we also have Saral Jeevan Bima, which is for a different kind of audience, which is for a different kind of segment of customer that exists there, who would not have all of this data available in any digital source. And when I say that, while the PAN number, etc., would be available, but having a CKYC record or having an Aadhaar or having the Aadhaar linked to the mobile number where you can do the authentication, all of these things may not exist. We've also seen customers, and this was one of the question here in the Q&A from someone, in the CKYC as well. When we find the record, the customer KYC data exists, but that then the quality of data that is there is not correct.
Correct.
We have seen scenarios where customers come and say that, hey, the details are not matching. While it is linked to my PAN, but my address is not correct, or the date of birth is not correct, or things of that sort. So as I had mentioned in my previous part when we spoke earlier, we can't have this for every kind of customer. And India versus Bharat is again a different way to look at it. Maybe tier 1 and tier 2, we would have the customers, but tier 3, 4 and beyond, we may not have that level of penetration where the user is, the customers will be able to provide it. Another way to look at it is also from the perspective of the product. So as I said, live, we have been doing it, but if we have to say, look from a two-wheeler perspective, or for any embedded product, small ticket size product, I am not sure where in that case every customer would be able to do it or not, because we see a lot of customers who are, say, first time vehicle owners. They just recently blue collar job, recently bought a vehicle, want to get bought a bike, etc., and want to get a policy on that. They not have all the data available there in that fashion. So if we make it mandatory for all kind of customers and all kind of products, we may end up leaving such customers on the boundary. They may not be able to get insurance in the way we envisage it. So I think we will, there is a very fine balance in terms of what we want to achieve, what is the guiding principle, and what is the purpose where we are starting from. But it may end up hurting the penetration, because India and Bharat, there is a divide that exists today, and the kind of customers which are there, the kind of citizens that we have in terms of their digital literacy, and in terms of their willingness or their comfort in sharing all of that information, there is a big variation there.
Yeah. So I think that in our previous discussion, you mentioned how you are looking at almost an offline channel as well. You probably are already doing this.
Yeah.
And, how do you see that play out? Is that a massive part of your strategy now?
On the live side, as I said, so the way we work is that we will have the initial, the first process as a digital process, where
Okay.
there would be a CKYC based check, or the customer would have an option to do it through Aadhaar, through their DigiLocker account.
Right.
If these do not work out, then there is an option for providing it manually.
Right.
But looking at the volume of the GI, and let's take the example of two-wheeler, looking at the volume of two-wheeler insurance that exists today, and looking at the ticket size, it may not be possible to have this layer, which is the third backup layer of a manual process, may not be operationally feasible to do it in that way. And specifically where the customer's expectation is to get the policy instantaneously. So I just purchased a vehicle, I want a policy, I take it out on the road, and I need a policy copy with me.
Yeah.
So it may not be possible to do it in that way.
I'm just reminded of something I've been sort of following as a as an industry observer. It's the village level entrepreneurs and the way rural sort of outreach has happened from banking, be it agri loans or way they've opened accounts, etc., and how they deal with the business correspondent model. So it's almost like studying the end user. If one is to look at maybe a Bharat penetration of insurance, then the same model may not apply. It's almost like let's start from scratch a little bit. And yes, of course, the problem of KYC exists there as well. So probably there are parallels here. I mean, I think maybe business correspondents could double up or something. So that's just some thoughts I had on this matter. And your point about CKYC is totally right. It is garbage in, garbage out. So in a way, if you look at CKYC, it's almost like a data source of which you still have to go and qualify and see if the data is something that's usable or not. So the onus doesn't go away from the insurer in a way. Great, thanks, Sudeep. I'm actually going to turn now back to you, Samir. Mostly from a perspective of a vision and where you see the trends going. So the open-ended question really is, what does the future hold for us in the general insurance space?
Okay, the current chairman and the dynamism that he has brought to the whole level of things that are happening with the authority is amazing as well as mind-boggling, because it's sometimes you find yourself trying to catch up as much as you want to, but the speed of that is happening is really amazing, to say the least. Because what is in offing is there are so many things that are in offing that I can't tell you. Say, for example, we have this one. There are actually various lines of things that are happening. One is from the health insurance point of view, there is this Ayushman Bharat whole thing that is happening, which is again is amazing, because if it actually fructifies, it is going to completely metamorphosize the entire health industry, because you will have doctors, you will have hospitals, you will have every kind of things. We had a meeting with ABDM people, and in fact, our company is now one of the first one to get linked with the ABDM, and we can issue the health cards to all our policy holders. So that's something. And in the meeting that was there, it was really, if it really fructifies, it is going to be something fantastic, because everything will be digitized. So in fact, that will also bring a lot of value to both insurers as well as the patients who have to go to hospital, because there could be standardization of rates that could happen across, because currently hospitals are not regulated in the way we are. So that's one thing on the health side. Second, that is happening, which is again, we had a meeting with the member finance and investments. There was a big meeting where they were talking about the e-insurance, that is dematerialization of every policy
Yes.
that's issued.
Yeah.
That is going to be a big one especially for life, yes, but for us, means from the value perspective, it is still questionable in terms of, because ours is a very short-term contracts. Longest being 3 years or 5 years in case of loans, etc., or new motor vehicles, etc., is for 3 years, but rest of it is 1 year. And if you're talking of travel and something like that, it could be as short as just 3 days, 4 days, or even a day.
Yeah.
Depending on if you're just traveling abroad for a day, you can take that insurance for a day and come back. So it's a wide spectrum thing that we have. And dematerialization, if it happens, again, there's going to be a lot of push on that. If this is happening on 1st November, the members' anticipation is that the dematerialization could be stepping in maybe in December, January.
Yeah. Oh wow, that's so.
So that's the indications given, but we are still at the discussion stage and stuff like that. We really don't know how things are going to pan out. Okay, that's one which is a big thing that is there. And then there is something called Insurance Sugam or Bima Sugam or something like that, because it is going to be a platform where every person who is so all insurers, both life, general and health, would participate in it. All intermediaries can jump into it.
Yeah.
And they are going to, at least the thought is that they want to link everything. This is at a design stage as we speak, where they may want to bring in all the NSDLs and CKYC, SARSAI and everybody on one platform.
Mm-hmm.
And have these people to what do you say, to kind of take this forward. So it is going to be a little bit of a tough thing for us to do. Okay, so but let's see, it is still on the design phase stage, but I believe there are a lot of discussions that have happened at GIC levels.
Yeah.
Okay, so a lot of interesting and exciting things in the offing, and I'm sure it will excite Prerak as much as it excites us.
Yeah, it's fairly scary at the same time.
So the thing is, what I feel, digitization will bring a lot of things, and somehow I believe, though there is India and Bharat, if you see the usage of UPI, okay, in the rural sector, etc., it's an eye opener. We always underestimated their usage, etc. I think they have proved everybody wrong. All the pundits have been proved, wrong in that sense. I really don't know as far as their understanding of insurance is concerned, because it is technical in nature.
Yeah.
And it is going to be a little bit of an uphill task for whether it's life or general to make it useful for them. Okay, but be that as it may, I think with the so much deep digitization and the data being 5G coming in, would also have I'm sure they would have an effect in terms of speed of delivery, etc. Because at a rural level, I'm sure the speed could have been this thing. Though I've never experienced these issues because I've never been there to actually check for myself. Sudeep is possibly better placed to tell you about in case of, yes, in life insurance in 2015 we had a problem in a little bit of tier 4 cities. The internet speed was not good enough, but then 2015 and 22 is far apart. And things are really moved fast, and it's really fast and furious, if I may say so.
Yeah. Which in fact plays into the other question that somebody asked here, which is, do you think the timelines are too stringent, and should the industry kind of push back?
Just let me tell you, through GIC, I'm part of the committee which is there, and we had a discussion with the authority. Okay, a senior dignitary of the authority had kind enough to grant us time to kind of explain to us what exactly it is. So what has been the outcome of that meeting was that though they appreciate our scenarios, etc., but they are saying that you will have to give us a roadmap to it in case you are seeking time, etc. So you need to give us a roadmap. Only then we will look into it. And he says, let us see, you see how much you have traveled. So get back to us maybe by October 15th, and then we will decide. So my view on this is, I don't think so they are in any, I would not say they don't want to give it. I think these scenarios of FATF and other things which are Damocles sword hanging on our head, they themselves find it really hard pressed to not give us any further time. They may consider some bit of things in a loose way, but not taking any action, etc. I think is not acceptable to them. So though it is very stringent, they also exceed to that. Okay, though not in so many words, but at least the uh, you feel whatever they have said. They cannot say things very openly and in this kind of a forum, etc. But they themselves are under pressure from the Ministry of Finance, and Ministry of Finance themselves are under pressure because of the FATF Damocles sword that is hanging.
We should.
So I think it's a long way, and it all goes to maybe Paris, where FATF is based out of possibly.
Great. Samir, amazing. I mean, such perspective, such clarity on it, and especially the dematerialization and the aspects of the industry coming together, etc. When they talk of a new sort of, integrated approach to it, which is highly welcome, although timelines are very scary, is my sense of it.
No, I think everybody is in the same boat. Let me tell you this. I am talking to my counterparts in different companies. Okay. Nobody seems to be saying that hum to kar lenge. Okay, let's be very frank on that. Kisi ne nahi bola, and of course Sudeep's he has a different journey. We have not got to them and asked them ki bhai kaise karna hai. That again is a question by itself. Ultimately, we on our own is going to be a different journey, but through the intermediaries, because what happens is a multiplicity of things. I may want to do it the way API want through an API. But somebody else say, nahi, hum API nahi karenge, hum kuch aur karenge, or something else that comes in. To integrate and having middlewares who can talk to their systems, our systems, and it is a, I must say that it is a chaos. Chaos is the only thing that comes to my mind. Okay, but be that as it may, we have got to do what is within the given circumstances and scenarios that are before us. I think we have no option but to do it, and that is what has been indicated by the authority, and I don't blame them for doing it, because whatever they just got a diktat. That's my view. I may, that's what is my understanding of whatever they said. I may be wrong here.
Let me then, from the perspective of closing comments, give you the chance, Sudeep, to share your views on this topic, either your emotional view on the dates, timelines, or a more theoretical view on how the.
For me, from my perspective, Riju, I feel, I think this should be a story for every general insurer that there is. Okay, I am no different. Every general insurance for it is a sea change in the sale journey. Okay, whenever we approach, imagine a situation currently the distributor who's there, say for example motor policy, he may have all the documents, he never passes anything to us. Okay, fact is that because if you want to register a vehicle, you have to have a Aadhaar as well as PAN. So the point here is how do we communicate with him? One, and even if it is for renewal, a guy walks into your office or approaches you through the net, and his expectation is कि भाई ये बता दिया मैंने, अब मेरे को आप you issue the policy right away. I'm sure Sudeep will also agree with me on that.
Correct.
That's how it is done. कि भैया ये, and in fact he at times he will not even tell you it's a 2-wheeler, 4-wheeler. Okay. And there are so many more people who mislead you and taking 4-wheeler policy and say 2-wheeler because it is cheap. Okay, it's a big fraud that is happening, which is of course everybody is concerned about that fraud.
True.
So you have to, your system while issuing it has to actually talk to different people, including Vahan, to check whether it is 2-wheeler or 4-wheeler, whether all the numbers that is given is right or wrong.
Thank you, sir. I'm conscious of time. I'm going to allow Sudeep to stay as
Yes, please go on. Sorry for the.
Go on, Sudeep.
Sir, I completely agree with your point. What I was covering initially was that it's not about one entity being ready. So when a customer comes to buy an insurance, it's the insurtech or the intermediary or the distributor where the customer has approached to the insurance company. It's the complete ecosystem which has to be ready. And what we have done in life is not just us doing it, but Policybazaar, along with all the insurance partners in the life insurance space, doing it together. And when we look at GI, it's a completely different story, and I completely agree with you. Everyone is in the same boat. I think the kind of infrastructure and kind of the process or an SOP that exists in life has to be established in GI, and which requires some time. I think with the current timelines, just being a bit cautious here, but I don't think we as an industry are ready for it. Whether it comes to the API or the integration or the process or the SOP and the customer expectation. You have rightly pointed out, customer comes to, and I can say from Policy Bazaar perspective, customer comes to the platform, enters the vehicle number, makes the payment. The expectation is that the policy is done.
Instant gratification.
Yeah.
Yeah.
Instant gratification.
Got
The
it.
expectation is that I paid the money. Now where is my policy?
Where's my policy? Yeah. Makes sense. Okay, last one minute for you, Prerak, for your closing comments on it.
Thanks, Raju. I think Sameer and Sudeep have already brought up all the pertinent points, right? Just from an implementation of the guidelines perspective, the industry has to move forward, get this done. I think we'll collectively work together. My request is probably all the industry stakeholders. I also lead this other forum called the India InsurTech Association, where we try to bring together all the different ecosystem players to kind of agree and collectively work together to get a lot of these implementations done, right? So that's our way of kind of giving back and saying, hey, can we all learn from each other and collectively, as Sudeep pointed out, right, collectively move forward and implement all of this so that we can move the industry forward. So it's a great opportunity to get this done rapidly, collectively, for all of us. And it's a crucial step. It has to be done. It's just a matter of how quickly can we get it done. That's
Great.
it.
Thank you so much. I think time now for me to thank you, Prerak,
Thank you.
Sudeep and Sameer, for your thoughts on this. I think the statement here is that don't fear, everybody's in the same boat. Yeah, so we will figure a way out. Let's come together and join our heads and share our collective know-how and figure a way out of this. So thank you so much to our users also for joining.
Thank you so much,
good
Raju,
luck to
and the IDFI team for inviting us.
Thank you so
much.
Thank you.
Great. Have a good one, guys. Bye.